Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So I think we've got a longer cycle. It will almost certainly outperform the last cycle and looks more like 2017 to me, which, guess what, was a Trump cycle.
Liquidity is the driving force behind this cycle, and history backs it up. In 2017, many, including Raoul Pal, believed the rally had peaked. After a 10x gain, Pal sold his Bitcoin, thinking it was a smart move. But then Bitcoin exploded another 10x before the year ended. Countless investors got shaken out, only to scramble back in as liquidity kept pushing prices higher, fueling a massive year-end surge. This time, Pal sees a similar setup. With Trump back and a flood of liquidity expected, the stage is set for another extended bull run. But this cycle could be even bigger, thanks to institutional adoption, Bitcoin ETFs, and major corporations entering the space. Historically, Bitcoin has seen corrections of 70–80% in bear markets. However, Pal believes this time might be different, with a more modest 40% pullback instead of a full-blown wipeout. If that happens, many waiting for a deep crash could miss out entirely. As always, crypto rewards those who survive. Investors in projects that endure, just like Ethereum and Solana did in previous cycles, could be the biggest winners in the next wave. With innovation accelerating faster than ever, those who stay in the game will have the best shot at massive gains. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Where are we now compared to what your expectations were back in November, December when during our last interview?
In terms of which? Crypto?
General market, crypto. General market sentiment, from a macro perspective as well. Has that changed your thesis in any way? Has that altered it in any way? More bullish, less bullish?
No, it's exactly where I think it is, which is we're now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from the central banks and governments. We've got the US will be draining what's known as the Treasury General Account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China, and I think the US is been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if not, if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle, and that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed, right? That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up, and the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward-looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which guess what, was a Trump cycle. And we entered the Trump cycle last time with tariffs and oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell.
So for people that weren't there in that cycle compared to the last one, essentially, if we see a similar cycle, then we'll probably see it go into November.
Yeah, or maybe, as I said, it could even push into, that
early.
cycle. Alts peaked in Jan or Feb, right?
They did, yeah.
For those who missed the 2017 cycle, it was a wild ride. Bitcoin led the charge with a massive rally, followed by altcoins skyrocketing months later, taking the market to record highs. Now, with similar conditions lining up, analysts believe another extended bull run could be on the horizon, one that may last much longer than most expect. With Trump back in office, Raoul Pal and other experts predict a familiar setup. Potential rate cuts, increased government spending, and global liquidity expansion, all creating a perfect storm for another major rally. But this time, there's a crucial difference: the approval of Bitcoin ETF. Unlike 2017, these ETFs have already drawn billions in institutional capital, pushing Bitcoin beyond $100,000 for the first time. Meanwhile, on-chain data shows long-term holders are accumulating, exchange supply is shrinking, and global interest in crypto is rising, clear signs of a market poised for even more growth. Now, let's go back to Raoul Pal as he breaks down what's next.
Liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, and we're at $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end-of-year move. That's possible. I'm not saying it's definite, but I think of improbabilities, and that's where my head's at.
So when you put all these factors together, what's happening in the SEC and how bullish the current administration is towards crypto, and when you look at the macro factors as well, could we see a super cycle? Is it a sin if we discuss it this time around?
I'm going to flip it a different way of looking at it. Has Amazon been in a super cycle? Yeah. Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect. Right? The free money trade is you try and sell out somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big leg lower. And people are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin. Crypto is this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018, Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. The community was like focused. Tolly was a good leader. You're like, okay, there's signal here. So I like the cyclicality where you wash out all the bad ideas. People are testing innovation, and that's good, right? A lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them. So that, I think, is the power law.
The failure rate in crypto is just so much higher than traditional VC. And I'm just hoping
there's more crypto projects.
Just the amount of volume. Yeah.
Also, don't forget, unlike VC, these are coming to market instantly. So if you were to look at really early stage seed investments, and if you were to have a real-time mark-to-market on those, they'd be horrific. Are we going to die today? Are we going to survive tomorrow? Are we going to die today? I mean, that's all it is. They're the same. It's the same thing. It just happens to be the earlier stage bit that's hidden, because in VC there's no mark-to-market really until a token launches or equity becomes tradable, i.e. different people want to pay for the equity.
The previous Trump cycle triggered a massive crypto rally, and this one could be even bigger. According to Pal, the crypto market is right where it should be at this stage of the cycle, entering what he calls the banana singularity, the phase where things start to go wild. Pal points out that this cycle is shaping up to be more like 2017 than 2021, which could be a game changer for investors. Back in 2017, Trump took office, pushed for a weaker dollar, and China ramped up its stimulus, fueling a major crypto bull run. Now, with Trump's return and similar economic conditions unfolding, Pal expects history to repeat itself. Unlike the 2021 cycle, where the economy and liquidity peaked early, this time the market is just bottoming out, potentially extending the bull run well into early 2026. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.